Good morning. Hope you had a great weekend. So, there we go. So I'm starting the day, just take a look at the S&P sectors and showing across the board the correction that started. And we said this was coming, well, almost 2 weeks ago. And the markets, well, the S&Ps continued up, but you can see what started to happen here. The industrials, what was leading, technology, and all the leaders, communications, started chopping sideways. And we said, we don't know when this is going to happen, but historically, when the internals reach that level, something's coming. And it was the little breakout failure. And of course, the news, I guess, is what broke the camel's back, right? The credit downgrade. And that came out after the close Tuesday. And then Wednesday was the gap down. And down it went. And this day, I guess, was really the shot across the bow. But it was amazing. At the beginning of last week, it just went sideways and did nothing. It's like as if the market went to sleep. So now, Friday, we got that nasty reversal day where prices started going up. Looked like they started reversing up again and then failed miserably and went down with a vengeance. Just looking at, well, throw these on 15-minute charts, just ignore the moving averages, and you can just see kind of the waterfall effect as the selling just started to feed on itself, and down it went, and probably would have continued had the market not closed. So at this point, where do we go from here? Of course, I think the answer is eventually lower to an area of support where buyers are more comfortable, beginning to put their toe in the water. And while moving averages are subjective, looking at the 50 MA on the S&P, 440, this pivot low down here around 430. So somewhere in here, it's a wide area. We'll just have to see how it develops. And just looking at other sectors, you can see financials that were shaping up. They got that topping tail, and a continuation pattern turns into potentially many times into a measured move down, which would put it down somewhere around the 50 and the 200 MA. The materials, the same pattern. So this pattern happened a lot on Friday because there was that morning strength that fell apart. Communications, which has been strong, that's still above its major support. But you can see technology rolling over. It held the 50. And the industrials broke its major support, broke the uptrend. And that energy holding up kind of been the dog this year. It was great last year, was the only winner last year. So a lot of damage done. Even these healthcares, which looked like they were going to continue to go higher, fell apart. So damage everywhere. So I had the Russell up here, but you can see the Russell had the same fate with breaking above those highs. So it's a continuation pattern. Now, the tricky part with these is that, so this is still in an uptrend, we're transitioning to a sideways trend. If this had already broken down and had a void below, it would be a great setup as a continuation pattern short. These indices and a lot of stocks are still in uptrends. So an initial move down and a continuation pattern is just not the same probability of having something that's already broken down. So it could be a little whippy until buyers really throw in the towel. But these sideways consolidations, creating areas of overhead resistance, the depth of retracement, which now we see on some of these indices and stocks, sizable red bars. Everybody saw what Apple happened. So, a really nasty break on a leadership stock. And so everything coming together finally to say, hey, the market's going to correct a bit. We'll see how far it goes. Before I get to others sectors, I mean, the volatility index, we were talking, volatility index, low, 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 low. And we got this big, nasty reversal bar. on Friday. We'll see if it clears these highs, set an alert, and just be a heads up. Hey, things are getting weaker. Set an alert up here. We'll see when it gets there. So you don't have to watch it unless you choose to intraday. It's a good internal market gauge along with the NYSE tick and the AD line to measure what kind of day you're dealing with. And so if the VIX is going up and the ticks are pretty negative, something like this, you can see, hey, the ticks are staying below zero, tagging down here minus 600 to 1,000. VIX is going up. AD line was declining. So the day started off positively, but it declined from about a 1,600 down to 200 or so. So it was a significant drop, even though it was still positive on the day. So these are good intraday internal gauges to help you decide what kind of day am I dealing with besides just our prices going up or down. All right. So where is everything else at here today? Spiders. Messy chart with my horizontal lines, but this was resistance. We can put that above yesterday's high, Friday's high now. Can it get above there? And of course, since it's a wide range bar, where does it retrace if it can do that into the middle of that bar? We've got a level of minor support here and an unfilled gap to pay attention to. Right, there's 444, the 442 area. There's the unfilled gap and this pivot high. And the unfilled gap, that would be an obvious initial level for prices to attempt to hold from if they were to move down there today. And as you can see, they're up a little bit here this morning. Nothing of significance. There is a void above. Use this little congestion area right here at just below 450, these overlapping opens and closes where it attempted to hold before going lower Friday. There's a little congestion there. So besides the pre-market resistance that was created. So whenever it's up here a little bit, it's no big deal at all compared to the reversal on Friday. And eventually we'll see where this ends. And just like the internals gave us a heads up, we'll watch to see if sentiment begins to become more and more bearish, which of course it will if the market continues to go down. And we'll just monitor this to see when our internals tell us, hey, whatever it looks like, ugly or not so at the time, we'll start looking for patterns like this, breakdown failures. Just take this pattern and flip it upside down. When it'll come down to some level, wherever that is, our internals will line up, and then we'll start looking for what's showing relative strength, what's on support, what maybe is going to go in sideways as the market went down, and so on. And notice the weekly chart, the size of that red bar, pretty large, potent, still an uptrend, and that's a good thing, which tells us when it does come down to whatever level it is, this will still be an uptrend. So if it comes down to the 20, which is about the 100 MA on the daily chart, I was just looking at the daily there, lines up with kind of this 430 level of major support, give or take, if it should get down there. And but the strength of this move, there's no pivot lows. There's no pivot lows marked. So that's an indication or the strength of that move up. All right, SPX today. So these levels obviously move down as things become more bearish. And so things I haven't looked since I marked these, but down here today, you say, can it go down there today? It could. It would be a pretty sizable move. Can it get back up above here? I think that's highly unlikely after a crack like that. I think most are going to be looking for it to come down here. I just don't know if it'll get down there today. Why? Because of the way it came down on Friday. But it came down so fast, so much, there is the potential to retrace back up in here a little bit. So anytime you get a wide range bar, just generally the next day is going to be a narrow range day. And of course, we'll see if it can consolidate in the lower half. So that would be the typical day after the big red bar day, one which would go nowhere. So it's pretty far away to get down here and pretty far to get up here. But these has shifted down eventually, coming down to this level would make a whole lot of sense in here in this green area where you see all of the congestion. Measure it any way you want, with, I don't know, I guess something like a VWAP would look something like this, or a volume profile would point to something like this area, just because there's a larger area of congestion there. And ultimately, this is where the most significant support is, in between this area. And notice the 50 MA is also there. Our Qs. Unfilled gap, everything kind of gapped up at that time. 50 MA and major support is down here. You got the same reversal bar. So with a pattern like this, we're expecting prices should go down to the next area of support. And unless they can close deep into this bar, of course, above it, the expectation is eventually it'll come down here. And that's where the majority of buyers will be focused on, because however you cut it, however you're going to measure it, it comes down to looking to the left and where the congestion is, and that's where the buyers are going to be. Well, we already looked at the Russell. Transports broke the uptrend on the ETF, major support, the low prior to the higher high. That violated the uptrend. But so it's interesting, this has, I think, 50 stocks in it. It's interesting that it moves close to just the transports that we looked at. But you'll notice if you look at the transports, the Dow transports, not the ETF, it's still above here. So those extra stocks that are in the ETF are where the weakness is, versus what we see here, where it's still well above that major support and a rising 20 MA. We can take a look. Well, I won't take a look. Maybe later on in the green room, we'll take a look at which of those other 30 stocks are showing weakness that are dragging this down. Looking at interest rates, right? That was the culprit. Big move up last week. Started with this wide range bar, move up, took out this resistance area. Came in a little on Friday, but this is really where things could get out of hand, I think, if this 10-year was to break above the top of this trading range. Right now, it's just a move near the top of the trading range. So any kind of move like this, we always interpret a power move like that coming into resistances. What does it do now? Does it just collapse back down to the bottom of the trading range, which the markets would like? Or does it go sideways up here, absorbing supply, and then break higher? So that isn't going to happen today, but it's something that we'll have to keep an eye on as to how it reacts to this resistance and if it actually breaks out. And the 30-year we don't talk about as much, but I mean, this started to move up earlier than the 10-year. That was the heads up last week when I had an alert above here. It was there for a while. And also I was like, what's going on? That this is breaking out. And then the news came out at night. So somebody knew what was coming. And these started to lead the way up. And you can see this is up near the prior pivot high. But we'll see if these interest rates keep going up because of that, not default news, but lower credit rating. It's going to put more pressure on the markets. We can bet on that. All right. Let's take a peek at the futures here. They're not doing anything. You got that topping tail. I think prices need to come down here before anybody's going to want to step up more aggressively. For me, that's just common sense. The Dow, big topping tail reversal, range expansion, topping tail bar, powerful signal where prices should go lower. You can see it's up near these pivot highs. So prices just reached a destination area, whole numbers, internals lined up. And it's like, okay, we know risk is rising on the long side, but what's going to trigger it? And when we first got the internal signals, I said, this could, historically, hold up for a couple of weeks. And it did. And I said it rarely ever turns on a dime, and it doesn't. And so we got this correction ongoing now, and we'll see how it unfolds. Russell doing nothing. It's just quiet here this morning. This is trying to stabilize. And so when interest rates went up, we pointed out this was down at the bottom of the trading range there. And it was interesting that it kind of sprung up in a strong way versus, kind of hanging down there like it did here on the weekly chart, just hung down there. Over here, you had this little bottoming tail breakdown failure reversal, whereas this was kind of weird. That it came down with a wide range bar, it stalls and then just rips higher. This thing, look, this downgrade, people don't make decisions like that. These companies don't make decisions like that. All of a sudden I'm like, hey, you know what? I think we should, downgrade the U.S. debt. No, they were thinking about that for a while. And it's like, are we going to put our foot in our mouth? What's going to happen if we say this? And ultimately they came to the point where they decided to do it. And so while that's going on, who are they talking to? Well, somebody knew what was going to happen there. It's just the way life is. Oil's been moving up, so a little more bearish fuel to throw on the fire. They're stalled at this resistance here. And just like looking at interest rates, how they act at resistance, it doesn't matter what it is. We'll see how oil acts at resistance. So if we see oil continuing to strengthen sideways and then pushing higher here, and interest rates are pushing higher here, while, right now, the thought is, looking at the broader markets, that the correction should be viable, pullback, uptrend, bullish, so on and so forth. Maybe this thing is a little bit out of hand. So that's why we have to create a bias and then continue to monitor what hit is on an ongoing level. Just to say, are things improving? Are they getting worse? Excuse me, on the 15-minute spiders, is there minor support at 448.50? Should be black and white. 448, 448.50, minor support. No, there's no support. Minor support. Gate. So, Deepak, our rule of looking at support and resistance, if price is traded above and below it, it neutralizes it. If you're looking to the left and you see an area of minor support, the high, that was taken out, well, you're crossing across. So here, we're not crossing below or through anything. But if you're talking, you're saying 448, there's really not, I don't know if you're talking about this level, but all of this has been traded above and through. This little congestion area right here, where price is stalled at the end of the day, I view as relatively meaningless. Why? Because look, you've got all of this. And compared to this little section here, it might stall there for moments, but ultimately, when we looked at the daily chart, this is the area where buyers will want to show up and give it a shot. Now, the faster it goes down there, the more willing they're going to be on a short-term basis to step up there. And I pointed out this move down created a price void. And that's the reason why after wide range bars, we often get a narrow range day, because wide range bars are this big momentum move, creating a void in a smaller time frame, and you get bounces. So, all right, I got to run. Let Dan take over. SPX levels I gave before. Asher, there you go.
You're done?
Yep.
All right, good morning. Hi. You're done, Greg? I see you're moving things.
Yes, I said yes.
So I'm glad we're bouncing a little bit. And I hope it's a go nowhere day that closes positive, because then it creates a better pattern, a better continuation pattern with more overhead resistance. We still gave a number of bullish trades in the weekend letter because they're all patterns of they shouldn't trigger if things are going to keep falling apart. Where'd my pre-market go? There. Retracement concepts, this is less than a third. So 30-minute low could be our little bounce to get into this continuation. So we'll just play it by ear. Yeah, you know what, Thomas? I almost put cost in the weekend letter, the failed buy setup with a big old void, ugly engulfing. So yes, it is on my list for that exact reason. When I looked at the credit, I think it was only 50 cents though. And this thing, this thing can move, but if we have a bearish bias, which we do, then that obviously favors continuation lower. Tesla's in the weekend letter. That's my alarm just went off. Continuation lower with a big old void. Microsoft is the same. The Dow, Microsoft, so $1.80 or whatever. Every other stock is not moving more than $1. So very, very, mellow opening here. But under Thursday's low, we're going to do a call spread on this. And but see how these have rolled more than doing one of these in an uptrend with a void. So yeah, we definitely have a bearish bias here this week. Couple earnings here, Tyson 50 and change. That's a nasty gap. I'll put that in a window. And that fits in the category of it's an ugly gap, but it's a big one. And near this $50 level, let's see if buyers want to step up or not. Go earnings 14 and change. It's just so far from the 20, but it does have room to go lower. 30-minute low maybe. Now this I like a lot. It's a 1, 2, 3, but it's a buyout. Otherwise, I love this pattern. The DKL is, look at this volume dumping into earnings. Somebody knew something there, and it's gapping down a little bit. Bearish all time frames, no interest. Elon up a little bit on earnings. 30-minute high, maybe. It's a bullish weekly. FRPT down. But this is a buy on a pullback. Look at the weekly monthly here. are beautiful. This one, I can't tell where it's gapping, but if it takes out yesterday's high, then it's bullish. Daily, weekly, I have an alarm at 56.70, I think. HE. Deep retracement, buy setup. I can't tell where it's opening. I have it right here. Let me put Tyson here instead. I have Nike here in the bottom right. Bottoming pattern. Look, it's above the 20 and the 50. It was a gap reversal Thursday, gapping up a little bit. I think it had some positive mention in Barron's. The 30-minute high. This is a put spread idea. HSIC gapping up a few pennies. I have an alarm at 78. It's not technically at 1, 2, 3 because Friday is below Thursday. But so what? If it takes out Friday's low, I like it for short. There's a void here. It's a big old sell setup and turn on the weekly. So I got my alarm. KKR, it's kind of a sloppy bull flag, but capping up a little bit. I'll watch it. Cost down, no pattern. LANC up, but too extended, but bullish daily, weekly, monthly. Oh man. Now this is one you might think, oh, I'm going to short yesterday's low, Friday's low, which would be fine for a day trade. But what if it takes out Friday's high? Then we got a bear sandwich, W bottom, new low plus. Do you all see that? Now we project and say, what if it does this? And that's why we set alarms. Because if it does that, then we'll take a look at it, and that would be a beautiful long and put spread over Friday's high. I just had an alarm on Oscar November go off. Buy setup here. We have this as a put spread idea. PR closing breakout, daily, weekly, monthly. My alarm went off. Well, that's looks good. I'm gonna put that in a window. Looks great. Papa Romeo. And typically during the week, I don't trade in the first 5 minutes. And on Mondays, I don't know. I kind of have a rule. I don't trade in the first 10 minutes because there seems to be more, hangover from weekend orders and just more wiggling around. Now look at this little guy. I just saw it going by the ticker Perzo, recent IPO. It's blasting up here to 227. So the gap's too big. All right, let's just keep going up on my interest list. It always shocks me. It was on this day right here, I think, that they announced that they're filing bankruptcy. What the heck made it do this? But now they really did it. All right, look, HSIC. What did I just talk about? I'm sorry, man. Just spoke about this. I couldn't tell where it was gapping, right? So putting that in a window on my other computer, and this is a beautiful setup if it can hold its strength. And that means, maybe 10-minute high, maybe controlled pullback that doesn't retrace more than 78.20 area. So that is a tier 1 little gapper that I like so far. HSIC alarm. Okay, no, I had a down alarm, so let's ignore that. Adobe. I had an early alarm. Well, let's see, my alarm should have been 5:35.64. Adobe 5. $5:35. So if it can take out Friday's high, this is a put spread idea. And again, I don't think it will if the market's going to stay weak. Boeing here, I see moving a little bit. It's a buy setup, bullish weekly, monthly. So Boeing's interesting here on the bullish camp. Look at Nike bottom right moving. This easily could go to the 200. This could be a directional 30-minute high. All right, Tesla under the low, OMCL alarm. This is in the weekend letter. Don't have many alarms going off today, which is good. But OMCL, beautiful, 2.5 week turn down there. I love the range expansion bar on a Friday.